the trend is in its continuation. What we spoke about last week was that of the potential of a bull flag scenario playing out. You can fast forward, of course, to today's session on the S&P 500. We closed up just over 22 points, roughly 0.75% on the market itself. And as such, we are breaking out of this bull flag continuation. And this is also working in agreement with that of the rising exponential moving averages. Pay attention to what happened on Wednesday, Thursday, and also Friday last week. We came on back down, we retested that rising 10 exponential moving average, and as such you can see a very quick reaction off from this area. It was a very shallow pullback, and as such, as at the close today, we've now finished at an all-time closing high once again on the stock market. When it comes to the NASDAQ as well, have a look at this. Very similar type of pattern, a bull flag back into the rising 10 exponential moving average. This is where, generally speaking, the trend continuation occurs from, either the 10 or the 20 exponential moving average, depending on, of course, how deep the little sort of resting pattern is. But again, you can see a little gap between that of Friday and today's session, up over 110 points. The NASDAQ closing up over 1% during today's session alone. What we've also been speaking about as the markets have pulled into these bull flags is that we've allowed that of the ATH to reset, and also that's worked in conjunction with the CCI. So as such, the CCI, the Commodity Channel Index, it has been continuing to hold above that of the 100 print. You can see it's closing very close to 180. But what's more important is that of the ADX that was a little bit elevated moving into really the peak, which was Tuesday last week. It has allowed it to reset, to come on back down into the mid 30s. We've got it closed today at 38, but again, this is just us or the market itself pulling over, right? Allowing the engine, so to speak, in the car to sort of cool down a little bit before we continue on our merry way further down the highway. That direction, of course, is higher prices for equity prices moving forward, also the market indices, and in our top 12 list as well, or top 10 list, I should say, on the left-hand side of my screen. What I haven't done is recap the industrial average. To a lesser extent, it still hasn't actually closed at a new all-time high like the S&P and the NASDAQ. You can see we're still a little bit below that of the Tuesday peak last week. However, again, this will catch up in due course. Now, I'm not going to go into the detail of it, but I just wanted to say pay attention to the share price of Amazon. Okay, I'll just repeat myself. Pay attention to the share price of Amazon. Today, we saw that breakout that we were speaking about over the weekend. We were looking for a reaction off from like this most recent support that Amazon has been pushing on back down into, that of course being that secondary right shoulder of the inverse head and shoulders broader pattern. This is the head in green, so to speak. You got two double lefts and then two double rights. As such, right now we've broken above the neckline that we were talking about, whereby it makes a lot of sense to add to existing positions. So we'll see whether or not, again, we see any follow through with Amazon. But today was a major signal in the share price of Amazon. What I'll do, I'll recap that at a later date. But by all means, I'm very excited about that individual trade and also the continuation of the markets to higher prices, and also the majority of shares in our top 12 list which are continuing, right, to appreciate in price. The entirety of these stocks we have got long positions in, or what I should say is that we do not have any vested short positions in anything, right? We are overwhelmingly long. We've been overwhelmingly long for a prolonged period of time, and again, this is the benefit of trading in the direction of the trend. Ultimately, I understand that the trend itself is going to change, all right? We're not always going to appreciate in price, but what people are failing to understand still, even at the current juncture, is that if you go back far enough on these markets, really what we did was just mark time and tread water. Really since the beginning of 2018, the late stage of 2017, all the way over here, and it's only been very recently whereby we have seen the definitive breakout above this area. So all of this price action down here, I know there's like squiggles all over my chart, but all of this has been building as a pressure cooker to some extent, whereby right now the bears are completely capitulating, and as such you're starting to see the benefits of understanding two P's, which are public participation. All right, this is the public participation in terms of the trend continuation moving to higher prices. So again, just hold on to, right, those longer term durated core contracts, whether or not it's on the Qs or the SPYs, or even potentially the diamonds. To a lesser extent, I'll see also if I can bring up the correct chart on the transportational average. All right, you can see that this was a pretty decent candlestick today, right above our 10,855 trigger. This is now, psychologically speaking, the retest of this resistance as new support we've successfully held, and we're starting to see the bounce. And as such, this is now opening up the doorway for the transportational average to move up to 11,344. We've been speaking about market arbitrage, not only with the Dow Jones transportational average, but also with the Russell 2000. You can see here as well. Does this come as any surprise to anyone? Hopefully not if you're in that pro analysis class, but you can see here 1,611. This was, again, a little bit of a pseudo different pattern. It was more so the rectangular stair-step pattern holding at resistance. We had some clues about the ADX turning up and also the CCI holding, right? Prior to this move, have a look at this. ADX turning up. This is just textbook stuff, by the way. The CCI printing now above or very close to 150. A long white Morobozu candlestick breaking above this resistance that has been in formation for really the entirety of November up until today's trading session. Again, we've been speaking about market arbitrage here, and also the likelihood that this market here, the Russell 2000, is going to run very quickly up to 1,700 points. So again, for those of you who've taken these positions externally to not only in the S&P 500 or the NASDAQ or even a bunch of our individual trades, if you've jumped into the Russell 2000 or even the Dow Jones transportational average, I'm hopeful that you're sitting here with a big smile on your face and you're doing pretty well for yourself. So again, think about our top 12 list in particular. Keep laser focused on Amazon. I think there's a good chance that if these markets continue, Amazon is really going to contribute to the gains that we saw today in the NASDAQ. Again, a very powerful session. And as such, you should be sitting here just appreciating the benefits of trading in the direction of the trend and holding those positions a little bit more relaxed and allowing the market noise to shake out a lot of those weak longs and then allow, of course, the markets to naturally push on higher or push on up higher into higher highs. All right, so on that note, everyone, enjoy your Monday evening. Jump into that pro analysis class if you haven't already done so. There are a lot of trade opportunities happening when it comes to our watch list that we follow. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.